Hey everyone, welcome. I am absolutely thrilled to have you here for today's explainer. Today, we're taking a magnifying glass to one of the most talked about networks in the entire crypto space, Solana. We're going to objectively decode the massive growth potential and, the equally massive inherent risks of Solana's current market position. We're cutting through all the noise, checking our emotions at the door, and looking strictly at the hard data as of August 2026. Let's get into it.
Okay, let's dive into this and immediately ground ourselves in reality. 73%. That is exactly how far Solana is currently sitting below its all-time high of roughly $293. Wow. So while the network is absolutely buzzing with activity, from a pure investment standpoint, it remains a technically battered asset.
To make sense of where Solana is actually heading, here's our roadmap. We're going to hit 1. Current market situation. 2. Fundamental strengths and weaknesses. 3. Solana versus Ethereum. 4. Macro and market factors. And 5. Price scenarios and conclusion. Like I said, this is all about pure, unbiased data.
All right, starting with Section 1, current market situation. Let's establish the exact status quo and the crucial levels we need to be watching right now. So, with the current price hovering right around $78, we are sitting directly on top of a critical decision zone. That $72 to $78 range, it's essentially a line in the sand. If Solana loses that $72 support sustainably, the data points to a highly probable drop down to the $62 to $68 level. And if things get really ugly and it breaks below 60, well, the technical situation deteriorates fast, pulling us all the way down toward the $50 range. On the flip side, to get back to its all-time high, this asset requires a staggering 276% growth from where we are right now.
Now, you might be hoping for a quick bounce back, but a true trend reversal is a step-by-step process, not an overnight jump. You can't just bounce to $90 and suddenly call it a bull market. The market structure actually needs to form higher lows. Step 1, it has to recapture that 85 to 90 zone. Step 2, it needs to decisively close above the psychological $100 mark. But the real confirmation, the point where we can actually start talking about a reliable midterm trend reversal for Step 3, doesn't happen until it breaks that 115 to 125 zone. Only then, at Step 4, can it begin to attack the heavier resistance around $145 to $160.
And we really can't look at dollar value in a vacuum. Take a look at this number, 0.00122. That represents the current SOL to Bitcoin structure. Why does this matter to us? Well, because Solana can go up in dollar terms, but still totally underperform Bitcoin. So for a true, aggressive altcoin bull market phase to kick off for Solana, we really need to see this ratio cross back above 0.0014. Anything below 0.0012 basically means the relative structure remains structurally weak compared to the big dog.
Moving right along to Section 2, fundamental strengths and weaknesses. Let's look under the hood to see what's actually powering and plaguing the Solana engine.
On the strength side, guys, this network is legitimately a powerhouse. We're talking a massive $1 to $1.6 billion in daily decentralized exchange volume. That proves Solana isn't just some theoretical project. It's processing immense real-world trading flows every single day. And technologically, they aren't sitting still either. In July 2026, they scaled their block limit from 60 million up to 100 million compute units. That is a 66% capacity increase. Add in the extremely low fees, and the user experience for things like high-frequency trading, consumer apps, and micropayments it's incredibly strong. And this data brilliantly illustrates one of the network's absolute biggest fundamental strengths, its massive liquidity. There is a staggering $15.6 billion in stablecoins sitting right there on the network, with massive slices made up of $7 billion in USDC and $3.2 billion in USDT. And listen, this isn't just a vanity metric. Stablecoins represent raw, undeployed purchasing power, international settlement capability, and really the entire backbone for decentralized finance.
But we do need a bit of a reality check here. Despite having $15.6 billion in stablecoins, the total value locked, or TVL, in Solana's long-term DeFi protocols is only sitting at about $4.8 billion. So what does that actually tell us? It strongly hints that a huge chunk of that stablecoin capital isn't being locked up for the long haul. Instead, it's being kept highly liquid, most likely used for rapid, short-term trading and speculation.
Which brings us to the fundamental weaknesses. Remember that incredible volume we just talked about? Well, a recent study from January 2026 showed that bots alone generated over $250 million of that daily DEX volume.
Now, bots aren't inherently evil, they do necessary arbitrage, but they absolutely inflate the metrics, making organic adoption look quite a bit bigger than it really is. Furthermore, unlike Bitcoin, Solana doesn't have a max supply cap. It's running roughly a 15% annual inflation rate right now, which steadily dilutes holders who aren't staking their points, creating this constant sell pressure. Throw in the high hardware demands that create centralization risks and the historical shadow of those notorious network outages, and you get a very clear picture of the structural risks involved here.
All right, on to Section 3, Solana versus Ethereum. Let's see how Solana realistically stacks up against its absolute biggest smart contract rival.
Now, what's really interesting about this matchup is how it perfectly captures the fundamental trade-off investors have to make. Ethereum is the established, institutional giant, right? It has the deep DeFi capital, the long track record of security, and ultimately lower structural and technological risk. Solana, on the other hand, is the growth-oriented, high-performance engine. It dominates in speed, consumer apps, and high-frequency trading. So the takeaway? Ethereum offers institutional safety. Solana offers significantly higher percentage upside, but it absolutely comes bundled with a much higher risk of a severe crash.
Let's transition to Section 4, Macro and Market Factors. Look, cryptocurrencies do not exist in a vacuum. They are incredibly sensitive to global economic winds, so we have to look at the broader picture. These are the macro movers that dictate the larger trend: falling interest rates, rising global liquidity, Bitcoin breaking new highs, and strong institutional ETF inflows. You see, Solana basically operates as a high beta asset compared to Bitcoin. What that means in plain English is that when the global market flips to risk on and Bitcoin goes up, Solana has a tendency to soar disproportionately higher. But, and it's a big but, the double-edged sword is that if Bitcoin dumps or the traditional stock market crashes due to high real interest rates, Solana will be dragged down violently, falling much, much harder than the broader market.
And finally, Section 5, Price Scenarios and Conclusion. Let's map out the hard data on where the price could actually go from here.
So here is a structured risk assessment and probability distribution for the next major market phase. The extremes, like a crazy euphoric run-up to $400 or $600, are statistically highly unlikely right now, sitting at just a 5% probability. A bearish breakdown toward $35 to $60 carries a heavy 25% chance, as does a choppy sideways market. But right in the middle, statistically the most favorite scenario at 28% is a solid recovery up to that $110 to $160 range.
So the crucial point is this: targeting $120 to $160 is a grounded, realistic expectation for a normal market recovery. I mean, that still represents a very healthy 54% to 92% gain from current levels. Banking on a $500 euphoric target requires a global crypto supercycle and massive institutional adoption that literally just isn't in the data right now. We have to plan for the base case.
If we have to distill this entire explainer down to a single overarching verdict, it is this: Solana is a fundamentally strong network. It has real usage, massive liquidity, and great tech. But it is technically battered right now. It offers above-average recovery potential, but you are walking hand-in-hand with very high risk, largely due to its inflation schedule, speculative trading dominance, and high macro beta.
Which leaves us with this final, absolutely vital question for you. Knowing that another 25% to 40% drop is entirely possible on any given macro shock, despite those strong fundamentals, how will you size your positions to survive the volatility? In highly volatile assets like this, your position sizing shouldn't be based on maximum greed or euphoric price targets. It must be calculated on your maximum acceptable loss. I highly encourage you to look at your portfolio today and really ask yourself that question. Thank you so much for learning with me today, and I'll catch you in the next explainer.